Hello and welcome to the Smart Trades Basics course video. For other products or to view the rest of this course for free and download the transcripts or any of the PowerPoint slides that go with this video, go to www.smarttrade.info. Again, just bear with me. I know you have seen this graph lots of times if you have watched the other videos, but I view the concepts you can learn from this graph vitally important if you want to learn options trading. I want you to be able to practically draw this diagram in your sleep until you know it front and back. To understand the next concept about open interest, you need to have a good handle on what it is to be long and short in options. Here I have pointed out where you will see the open interest figures in the options chain. This number is updated on a daily basis. Okay. Simply put, open interest is the amount of contracts that are open at any given time. To understand the concept of open interest, you need to have a good handle on what it is to be long and short in options. Whenever a long position is created by a buyer and a short position is created by a writer, then a contract is created, and the open interest for the option is increased by 1. The number of open option contracts decreases when buyers are purchasing options to close their short positions and sellers are selling options to close their long positions. Okay, now that is the technical stuff. Now let's get into some real examples to better illustrate it. We're going to start with XYZ stock, who have an open interest of 50. Which means 50 options contracts are in existence. Then someone buys 10 calls to open, creating a long position. Remember, they have the right to buy the underlying stock. And someone sells 10 calls to open, creating a short position, which means they have the potential obligation to sell. The open interest would then increase by 10. Now in this diagram, we are starting out with the same open interest of 50. Now someone is buying 10 calls to close, which means they were short in the position. They could have been potentially obligated to purchase shares. Now they are buying contract with rights to offset their potential obligation. Okay, so they're closing. Someone else is selling 10 calls to close out their long position, which means they are selling their rights that are spelled out in the contract. So 10 short positions are closed and 10 long positions are closed. So that means 10 total contracts have been closed out. The open interest reduces to 40. Remember, it takes a long position and a short position to equal one contract. Okay, so think of it like this. It's as if one person sells a car and another person buys a car. Only one car is sold. Now in this example, someone else is purchasing their right to buy. Someone else is selling their right to buy. So open interest would remain the same. They are virtually just changing positions. I don't want you to get bogged down in this little detail. In later videos, I will explain more on opening and closing. If you do go, on a side note, if you do go with the Thinkorswim platform, which is bar none the best platform that is around, at least at this time, realize you won't have to worry quite as much about opening and closing. Thinkorswim platform actually does that stuff for you.